If you're in your 30s, 40s, or 50s, I'm going to show you the benchmarks you need to hit that we close the financial gap before it's too late because, well, numbers don't lie. Let's start by taking a look at the net worth of individuals in America by age. Now, just so we're on the same page, your net worth is what you own minus what you owe. So take everything you own, your stocks, your real estate, your cash, your other investments, and subtract anything you owe, your debts and your liabilities. That is your net worth. Starting with the average net worth, these numbers are according to Fidelity. Under 35, the average net worth is $183,000. For people between 35 to 44, the average net worth is $549,000. For 45 to 54 years old, average is $975,000. For 55 to 64 years old, average net worth is $1.57 million. For 65 to 74 years old, the average net worth is $1.79 million. And for over the age of 75, the average net worth drops to $1.62 million because these people are now pulling money out of their retirement to actually spend it. The problem with looking at the average net worth number is it's going to be skewed because you have some people with extremely high net worths at a very young age, the young billionaires, the young multimillionaires. So these numbers can be skewed. So to get a better depiction of where you stand financially, let's also take a look at the median net worth. Again, these median net worth numbers by household are from Fidelity, and under the age of 35, the median net worth is $39,000. For 35 to 44, it's $135,000. For 45 to 54, it's $247,000. For 55 to 64, it's $364,000. For 65 to 74, it's $409,000. And over the age of 75, it is $335,000. So if you are over this number, depending on your age bracket, you are then above the median in your age group. That being said, let's get into the reality. I don't care if you are below this number, above this number, or at this number. You do not want to compare yourself here because America is facing a retirement crisis where the median American cannot afford a good quality of life and retirement at the same time. So you do not want to compare yourself to the median, even if you're at the median, below the median, above the median. Now I want you to understand, what do you need to do to be able to live a life financially free, and how do you get to those numbers? And it starts by understanding, what is your goal? The first question I want you to ask yourself is, how much money do you need today to be able to live your life financially free? Is it $50,000 a year, $100,000 a year, $500,000 a year? How much money is that? Let's assume, to make it a round number, that you need $100,000 a year right now to live financially free. The next question is, what do you need to do to be able to generate this $100,000 a year passively from your investments without you having to go to work? That way now you're actually free, because then you can decide if you want to go to work or not, because you can spend the next 12 months traveling the world and continue to live your life financially free because you have the $100,000 coming in. So how do you do that? Well, traditional financial advisors will tell you to follow what's called the 4% rule, which means you're going to take this $100,000 divided by 4%. I like to look at something called the 7% cash flow number. I'll explain exactly what that means. But let's start with the 4% rule. If you take $100,000 divided by 4%, that means you're going to need $2.5 million to be able to live off $100,000 a year. And what that means now is, if you have $2.5 million sitting in your investment account, you will then be able to pull out 4% of this number, which is $100,000 a year, and continue to live your life by pulling $100,000 out. And now you can live your life hopefully financially free because you have this $100,000 coming in. The problem that I have with this figure is a couple things. Number one is, you have to keep thinking about inflation. And every financial advisor will tell you that this 4% number already factors in inflation, but I don't think it factors in real inflation. Because although the inflation numbers say 3%, the real inflation that many people feel is actually a lot higher than the 3%. So that's my first concern. And the second concern, which is actually the bigger concern, is I don't like selling off my investments to be able to live my life. I want to keep owning my assets while my assets keep paying me. And this brings me to the 7% cash flow number. I know as an investor that I can invest my money into places and get a 7% cash on cash return. Where? like real estate. You can also see it in the stock market, but I try to do this especially with real estate. When I go out and invest in rental properties, I'm looking for a 7% cash on cash return, which means for every $1 that I invest, I get 7 cents of cash flow, 7 cents of profit hitting my bank account every year after expenses. And now if you take this $100,000 divided by 7%, that means I need a little bit under $1.5 million to be able to generate this $100,000 a year in cash flow after expenses hitting my bank account. Now, the nice thing about this, and the reason why I prefer this for me personally, and again, personal finance is personal, I don't recommend what I do to anybody else because I'm just a random guy on YouTube, I'm not a financial advisor, is because now when I have this, I can go and do whatever I want, and this $100,000 is going to continue being deposited into my bank account every single year. Now you might say, well, Jaspreet, what about inflation? Well, when inflation happens, what happens to rent prices? Rent prices go up, along with property taxes, along with insurance prices, along with the cost of maintenance and everything else. But your rent prices are also going up. So this number that you're generating will also be adjusted for inflation, because as inflation happens, rental prices go up, your income also goes up as well. And the other thing is, now I don't have to sell my investments to get paid. This is cash flow, profits, dividends from my investments. And now I keep getting paid without having to sell off my investments. So I can continue doing what I want to do and accumulate more cash flow as well. The reason why I'm saying this now is you got to have a starting point, you got to have a goal. Because if you know that this is your goal, well, once you can hit this goal, you're financially free. You don't have to wait until you're 65 or 69 or 73. You can do it at 34. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.